Uptober is finally here, baby. Q4 this year promises a lot, okay? October has historically been one of crypto's best performing months. Q4, best performing time of the year, especially in the year after the Bitcoin halving. The charts are already teasing green, which hints that history may be rhyming again. But let's make it very clear, this is not 2021. This ain't your grandpappy's bull run from 2021. Just because Bitcoin and Ethereum could see a parabolic rally, it doesn't mean every single altcoin will magically moon alongside them. The market is way more selective now, and picking the wrong bags is the fastest way to lose shit tons of money in this market. Today, I'm laying out the playbook for you as I see it in my humble opinion. The altcoins that look like obvious buys for the rest of 2025, as well as the speculative maybe bets and the, in my opinion, absolute hell no categories to avoid. So let's start with the most obvious plays. If you want to own altcoins that have high probability of pumping super hard in the next few months, then focus on the following sectors of the market. These are what have been hot and have a good chance of continuing to be hot. Perpetual exchange dexes, I mean, those things just print money. Stablecoin infrastructure, biggest use case in crypto, and RWA is the fastest growing use case in crypto. Now, perpetual swap dexes, think Aster, think Hype, maybe even Bybit's Apex. These could be the obvious winners because derivative volumes just keep migrating on chain. There's a lot of other players too. We could mention Orderly or Avantis, but those three are probably very interesting to keep an eye on. Now, traders want self-custody, they want lower counterparty risk, and they want zero permission markets. That migration has been exploding. Projects like Aster have real momentum right now because they have deep liquidity, multi-chain perpetual swaps, aggressive user experience improvements that matter to traders. Until recently, of course, Hyperliquid is absolutely dominating the sector with aggressive buybacks and attracting huge volumes from traders. But in just 1 month, Aster has blown the competition wide open, surpassing Hyperliquid's trading volume, not just by a little bit, by 10x. Helps that they have Binance and CZ supporting them. Stablecoin infrastructure is the second obvious play in my opinion because this is where the adoption is happening in real time. Now we have a lot of different names here, a lot of different tickers, new stablecoin native networks like Plasma's XPL backed by Tether, already offering big cash back and yield, no fee global transfers. Then you've got the 3 token system launched by Tether's co-founder offering a stablecoin yield token and governance token that's called Stable STBL. What I really like and think is very interesting, especially in a rate cutting environment, is Athena's ENA. They're experimenting with all kinds of new models for synthetic dollars. They just closed a big funding round. They've got digital asset treasury companies buying. Okay, they're minting new partnerships all the time. But it's not just about minting a dollar on chain. It's about what you can do with it. Swapping, borrowing, lending, and earning yield. Okay, there's real world assets. Tokenized stocks, tokenized bonds, ETFs, gold, all that stuff. And this is where probably Ondo Finance is the big player right now. I don't love their token because it's a governance token. It doesn't really accrue a lot of value, but it is the biggest RWA player and probably can trade on narrative from that alone. Ondo powers access to tokenized fixed income products and yield-bearing assets, bridging together TradFi and crypto. Ondo was the first to integrate BlackRock's now $2 billion tokenized treasury fund BUIDL in its ecosystem, okay? Now, Chainlink might be another obvious RWA bet since that's having its best year since 2021. Its oracles are what the real world data import needs for smart contracts to work. Their CCIP is absolutely insane. Interest rates, bond prices, credit scores, all essential to RWA's functionality, right? So this is like owning a piece of the infrastructure for the RWAs and really everything in crypto, to be honest. I'm surprised Chainlink is still only worth what it's worth. Without reliable oracles, of course, tokenized assets are just empty promises. Together, Ondo and Chainlink are 2 market leaders for on-chain access to traditional yields. And finally, we have one that I think is really in an absolute class of its own, and that's Pump Fun. Meme coins have been suffering a bit of a dry spell recently. There haven't been any billion-dollar runners in a while, but Pump, they don't care, man. People keep launching meme coins every single damn day. Pump has been performing pretty well recently due to its aggressive buybacks and the narrative around that. The daily fees remain in the millions. Now, I've got a big bag of that. By the way, if you ever want to see my full portfolio disclosures, link down below. Now look, none of these tokens are guaranteed a moon landing. That's not how markets or investing works. There's never any guarantees, but it is where capital is flowing and has been flowing right now and may continue to do so. Now this next group of tokens is the maybe pile, and a lot of optional risk here. But before we get into that, guys, will you finally start trading on an exchange built for traders like you, one that respects you and gives you insane trading bonuses? Well, Femex is one of the OG cryptocurrency exchanges. I've literally been using them for years, okay? Deep liquidity for serious trades, available worldwide. FEMX respects your privacy. And if you need access, may require a VPN in some cases, depending where you live. But for most of you, it shouldn't even require that. Right now, they're running one of the most aggressive offers in crypto. Make your first deposit of $5,000 or more, and you'll instantly get $1,000 cash back. That's an insane bonus. Plus, this month only, new and existing users who join through my link can unlock up to 1 Ethereum in bonuses. That's well over $4,000 at today's prices. So will you make the switch to an exchange that rewards you this much? Sign up now, claim what's yours, link down below. Let's get on to the maybes, okay? Wild card picks, if you will, and wild card picks, but we'll just see if the market starts paying attention to these and plowing money into them again, because the market often likes to plow money into these narratives, okay? These are not your foundation plays for your portfolio. They're the kind of trades you rotate in and out of with, position sizing relative to the risk with strict risk management rules, just in case they don't pump like others will. The obvious category here is meme coins. Oh, the attention and the liquidity just flows from one thing to the other so fast. They're fun, they move fast, they pump hard, they dump hard, and some collapse overnight. Projects like Pengu, which I have a bag of, a handful of newer meme coins have recently shown renewed whale interest in on-chain accumulation, which is why traders could rotate back over. Think things like Fartcoin, Pepe, Dog with Hat, Brett. These things all have good pump potential. That said, memes are sugar highs for your portfolio. You can't really build a portfolio entirely on them. Keep your position sizing relative to the risk you want to take, okay? And make sure to take profits, because just as quickly as you can make profits, you can lose profits on meme coins. Now, if you just like the adrenaline of meme coin trading, fine, but don't pretend it's long-term investing here. You treat these experiments as fun, that's about it. Date them, don't marry them, all right? The second maybe category is AI tokens, and the market could see another resurgence of AI and on-chain compute marketplaces, but it's too early and messy to tell. Sometimes this narrative's really hot, sometimes it's not. Now, there's not a coherent battle-tested winner yet. Most projects are purely trading on hype. A lot of it's vaporware and bullshit. So, I don't really want to name too many specific tokens here, but, Zero G's a big one that just came out. OG ones like Render and BitTensor, they've been around for a while, but they've also not had a lot of hype recently. The AI agent meta might come back, and maybe that makes virtuals useful, for example. So there's definitely a lot of interesting plays there, but just be very selective and understand that if that narrative doesn't catch hype, these things aren't going to move very much. If you want to dabble in the AI space, maybe wait for a clear change in sentiment and narrative to avoid throwing money behind projects on a whim just because they contain the word AI. You might say the same about robotics tokens. It's even more nebulous about what kind of value or real shit's going on there, but you can see the narrative pick up as well. Now, for the tokens that are a definite heck no for me, let me be blunt here. Avoid broad categories that are too crowded, overhyped, and or regulatory landmines. That means for the rest of 2025, personally, you guys do what the hell you want with your money, obviously. I'm staying away from buying generic layer 1s and layer 2s more broadly. Simply because they're on sale does not mean they're good buys. The market's next winners in infrastructure will be specific differentiated projects, not just another layer 1 with the same style, white paper, tokenomics, all the kind of, but it's 2 seconds faster, man. Nobody cares. Most of the layer 1 and layer 2 tokens are now priced with hope, so don't pay that premium unless you have a technical thesis and can stomach the competition and the dilution. Perhaps Linea could be a exception here with their Swift partnership and their actual buyback mechanism, taking the daily chain revenues and using it to buy back and burn their token. Mantle, the MNT token, may also be an exception to this with their integrations for the MNT token with the Bybit exchange. For me, also, governance tokens are a pass like Uniswap. If Uniswap ever switched on the fee switch, Uniswap holders would be eaten well, but they don't. It's just a useless governance token right now. Most governance tokens trade like social sentiment rather than revenue and fundamentals because there's really no value accrual for the token, okay? If you want real upside, you need to find things that accrue value. Gaming and metaverse tokens also a pass, and yeah, they have incredible storytelling, some have great partnerships, but still a very high-risk sector with fragile tokenomics, fickle audiences, and token rewards that often fail to sustain real engagement. Even the best-looking games have been absolutely kicked in the balls relentlessly. It's been a brutal place. I've lost a lot of money in gaming. So avoid allocating core capital there unless the game studio shows some kind of sustainable player-driven revenues and real monetization outside of token pump mechanics. Privacy coins. I know, guys. For me, I don't know. I like privacy coins. I like Monero, for example, but we have real regulatory risk for these intensifying globally, which means that liquidity over time could go down. Now, unless you want compliance, headaches, exchange delisting risks, I understand. Naval Ravikant's been bull posting Zcash this week. Everyone's making a shit ton of money on it. I'm not buying it, okay? You can if you want to, that's up to you. The rule of thumb for the rest of 2025 is to have a bias toward product first tokens, treat maybe tokens as maybe smaller positions, and have a list, whether it's my list or not, that you do not want to invest in. Discipline beats distraction in the market, so size your positions carefully. Remember, you don't need 50 coins to win. 10 coins or less, you can probably outperform most people in the market, okay? Find things you have conviction on, all right? Be ready to take profits or cut losses depending on whether your thesis works out or not. Okay, that's it. Thanks for watching.